Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Hey, Jim. Thanks for having me.
All this talk about the U.S. government possibly defaulting on its debt, a giant debt bubble there. And then we take a look at the stock market. Well, most of that has been purchased with margin debt that's at a record high. So whether it's government debt or commercial paper debt, we've got a giant bubble going on. So what's the state of affairs? What's real? What's not?
Well, that's kind of what I've been talking about, with the debt. That you remember I said that it was kind of reminiscent of the South Sea bubble, which was all about the expansion of debt. And it's interesting here. We have this. We're wanting to raise the debt ceiling and talk about default and all that, and then listen to the speeches about the debt ceiling and why we have to raise it, and the U.S. always pays its debts, but it hasn't paid any debts if you really look at it and think about it. But before we get to that, let me digress for a minute. I did some math in a spreadsheet, and I checked and double checked, and had a friend check this because I almost couldn't believe the dang numbers. But I really hadn't thought about what a trillion is, and I don't know if you have. I don't know if anyone else really has. But to put it in perspective, I said if a dollar were equivalent to a second, and then I just put it in a spreadsheet and did the math. But so a trillion seconds, Jim, is 30, and rounded off of the left the odd numbers off, but just rounded it. But a trillion seconds is 31,710 years. That's a trillion seconds. So and I looked just before you called the total federal debt, and it also says federal public debt. So I think what they're alluding to is that the taxpayers on the hook for this. It comes to 28.5 trillion. And so you say, well, let's just take this one step further. So if a trillion is 31,710 years, 28.5 trillion is 903,729 years. Let me say that again. 903,729 years if a dollar were equal to a second. So to put that in perspective, talk about defaulting on the debt. How can that ever be paid? Ever. So, yeah, as they say, Houston, we have a problem and they're wanting to raise it again, and I'm sure they will. It's being kicked around like a political football now. I'm sure you're hearing it. I didn't hear the news. Someone was telling me about it earlier today. Said that Mitch McConnell blinked. I think it was him, whoever. But they blinked, and so now we got a short-term deal maybe, and so now we're going to get to raise this debt ceiling again. And it's kind of like it's reminiscent of the China deal. Oh, we have a deal. No, we don't have a deal. Oh, we have a deal, and it's just manipulation of the situation, milking it for what it is, another tool to try to hold the market and everything else together. But anyway, the bottom line is you can't borrow yourself out of debt. And so the fact remains, you raise the debt ceiling and it just adds to the problem. Nothing's been fixed. And, this whole entire equity bubble has been, it's been induced by the expansion of the ever and increasing debt that can never be paid, and nothing's been fixed, and, the bubbles just continue.
So, okay, December 3rd, I think, is the next deadline. Does that mean the markets today, obviously, we're happy about a temporary deal, but it is surely temporary. It's going to be 1 month. So right after Thanksgiving, you're going to have this big bill. It's like you bought a big dinner for everybody and you forgot to bring your credit card.
Exactly. I don't know how it's going to end. I don't know. I mean, I guess it depends on how they want to spin it. Which way do they want to go with it? It's literally a political football here and being used to hold the market, to be a little weak, and then they'll have, come out with good news. It's exactly like what we saw with the China deal. It went on for a year and a half. If you think back about it, it literally, I remember it well. We got a deal. We don't have a deal. Oh, we got a deal. Oh, Xingping or whatever his name is, he called. Oh, he called. Oh, they just stepped out of the meeting. Oh, we got a deal. Oh, no, we don't have a deal. It just went on and on, it was laughable. And we're seeing the same thing here.
Well, if there is a huge default, that brings down not just the U.S. financial markets, that's going to collapse them around the planet, isn't it?
Well, of course. I mean, this is a dangerous, and that's what I've been saying. That's exactly my point. I've been talking about this bubble for forever. I get that. And my point is that that's the danger of this. I mean, look where we were. Look back. I've said this before, but look back at 2009, worst financial crisis since the Great Depression. Their words, not mine. And then coming out of that, more of the same. We're seeing these reverse repos at a level. Of course, that's just a daily thing, but it's just another tool. At one point, every day this month, we've been at 1.3, 1.4 trillion. Try to hold short-term rates. Every trick in the book, try to hold this thing together. And I mean, they've done a magnificent job, no question about that. But like I said, it has continued to just, make the problem ultimately worse while holding it. And you're exactly right. When we see, for whatever reason, a liquidity issue where things go bad, then I think they're going to really, really go bad, and that's been the whole point. I think it's potentially the end of the system as we know it, and I think everybody knows that. I don't say everybody, the powers that be. I think they know the dangers of this, which is why they're trying so desperately to hold it. Maybe.
In ancient days in Britain, when the king or queen died, all debts were forgiven, and they started at zero again. Do you see the U.S. doing that and the entire world agreeing, we all owe way too much money, let's just start at zero again and see if we can work? Or will they just run up massive deficits and nobody ever gets paid, but you guarantee the banks, you won't fail. I know we owe you all this money, but we're not going to call your debts in if you don't call ours in.
I don't know. I don't have that crystal ball. I don't know. I suspect. I mean, and I'm just guessing here, but my suspect, our best guess is that, the American taxpayer, and it's not just this country, but the taxpayers are going to be left holding the bag. I mean, ultimately the collateral, they pass these infrastructure bills, they pass, the stimulus bill, they pass this bill, whatever, run the debt up, and people really have no say-so about it. But if you go to the one little Q, to me, if you look at it on the Fed site, what it says is it says total federal : public debt. So where my mind goes is that ultimately the public is going to be held responsible for these actions that they really have, no say about. And, I think I saw on one of the websites I was looking at before you called, getting some numbers, the total, the per taxpayer share was something like $228,000 per taxpayer. So I think ultimately the risk is that the taxpayer, the public, is left holding the bag for the debt.
Well, obviously everybody can't pay $228,000.
So maybe that goes back to what Klaus Schwab said about by 2030 you'll own nothing and be happy.
Yeah,
I don't know.
And so in Canada, we have $1 trillion debt, and yours is 28.5 trillion. So usually, yeah, the numbers here don't make any sense, but I think the average Canadian, owes 33,000 in government debt. And back in the 90s, Canada had a surplus. We'd actually paid off our debt. Has the U.S. ever paid off its debt since the Second World War?
Not since so you got me on the history there. Since the Second World War, I'm not sure. You're probably a better historian on that than I am. I don't know on that point. I suspect not. Have they? Have we?
I don't know. But because it's an issue I hadn't had to deal with before. I never had to worry about the U.S. debt. I covered Canadian federal politics.
Yeah, and I haven't looked at that. I don't know. It's a good point. I need to look. I suspect not, but I need to look. You got me on that one.
Now, of course, Washington can say we can turn on the printing presses at any moment, print enough dollars to pay that off anytime we want. It's like mortgage money. The bank doesn't really have the $1 million in its account to give you to pay for your mortgage, but they just assign you $1 million, and that's how new money's created. It's not really created by the government. It's created when people buy houses. At least it is in Canada, and I suspect the same thing in the U.S.
Exactly. Money is loaned into existence. That is exactly correct. But, in this case, it would be borrowed from the Fed. And so it's debt. It's federal debt. They're not paying, like I would listen to the speech and I don't have the exact quote, but it was said that they were wanting to raise the debt ceiling to pay off old debt. So think about that. You want to raise the debt ceiling and pay off old debt. Okay, so you have a credit card, you're tapped out, and you call the credit card company and you say, hey, I want to raise my credit card limit here so that I can pay you my bill.
Well, you're getting an American Express to pay your Visa.
Exactly. Whichever. Exactly.
Yeah.
Exactly. And so it's not fixing anything, and that's what I'm saying. It's just a mountain of debt that is unpayable to the tune of, I couldn't believe the numbers. 903,729 years at $1 a second.
We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. So, Tim, between now and the next artificial deadline, because that's what it is, they're just playing politics, December 3rd, what's going to happen to the markets? Are we going to see another major correction again? The markets were very happy today. I think the only thing that was down was gold. Would gold be a good place to be if things go absolutely crazy, if they don't address this debt ceiling thing?
Well, let me answer it this way. First of all, let's go back to equities. I've watched pretty much all summer as we've been at a cyclical juncture where the equity market has been trying to turn. And that's why we saw the things we saw, I think, with holding a floor under the short-term rates and that sort of thing. And I think that's why we're seeing the games here with the debt ceiling. I mean, what's going to happen is going to happen. They're just making a political football out of it, I think, as a tool to hold the market. So I think it's a well-established fact that, the market's at kind of at a delicate point, and it's been trying to turn. How this plays out, I guess it boils down to the effectiveness of the tug of war. The game is being played here. Does the market finally, does the natural forces of the market win, or do they pull another rabbit out of the hat again and push it one more time? I don't know, but I can say this: it's in a very delicate position, and there has been a cyclical turn trying to take hold with equities. As for, you ask about gold, the structure with gold, I mean, it's turned, and the longer term 9-year top and in some of the shorter term cycles, they all suggest that we've topped, and so that we should go lower. Now, how that equates to, the results of what's going on with the debt ceiling, I don't know. I don't know if that means we have a favorable outcome or a not so favorable outcome, but I think any rally that we see in the precious metals is counter trend at this point and should move lower.
Crude has enjoyed unseasonably high prices right now. Are they going to calm down as we get closer to Christmas?
I think so. It looked like in August, like the energy sector had peaked. I see a lot of non-confirming indexes and sectors and such, and even some of the European energy indexes that I'm following with natural gas. That's all the talk now about how high natural gas is in and I guess it's the UK or wherever, and that's true. I mean, I'm not denying that. And we've seen the other little spike in crude oil here, but I'm telling you, in looking at the things that I'm looking at, I think this is the last hurrah. I think we've seen another push. I have to be the contrarian here on the energy sector. I think that it's all push as equities. Look, it all bottomed together. It all went down together. It all bottomed together. It's all going up together. And I'm telling you, what I see is that we're teetering on this turn that's trying to take hold. And yes, we've seen this last push, most recent push, whatever, in the energy sector. But when you look at it closely, what I'm seeing is, like I said, some non-confirmations that tell me that it's an ending move, not a beginning, of a new trend.
What's going on with the U.S. dollar, and if this default happens, does the U.S. dollar become basically worthless, and does that mean victory for the Chinese in their move to become the reserve currency of the world? Well,
it's hard to imagine the dollar not being. There's a lot of talk about that, and I understand that point of view. Particularly looking at the debt levels, right? But when I look at the dollar cyclically, the dollar it looks good. I mean, the dollar, short term, we're at, some sort of a top, but the dollar, I think we've had a much longer term bottom, in place in the dollar. And as contrary as it sounds, I'm longer term bullish on the dollar still. We have, every indication is we've had that longer term. There's a 4-year cycle, and we've had that 4-year cycle low, and some of the structure with the cycles of lesser degree are very positive. But like I said, short term, yeah, we may be at some sort of a top, but no, long term, I'm still bullish on the dollar.
Tim, thank you so much for chatting with us.
Jim, thanks for having me.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.